Hey there, it's Trisha with Easy Emini Trade, and I wanted to go over something that you might find helpful in timing your trades on the NQ or the ES. Also, haven't done a video in a couple weeks because I've been working on some back testing for an alternate entry using the Keltner channels, which would allow us to get in sooner. So I should be finished with that shortly, and we'll certainly give everybody an update on that. I'll be doing a webinar on Thursday, May 6th at 8 p.m. Eastern, and you can get the information for that on the website www.easyemintrade.com, and I'll definitely be going over the alternate entry during that webinar as well as the Keltner channel setups. So go to the website if that's something that you're interested in. So here's my screen of my charts, and I've got the ES here on the left, I've got the NQ here on the right, and then in the middle I have the DX, which is the dollar. And a couple months ago, it's actually probably like 3 months ago, two people in the room actually turned me on to this, Trevor and Suzanne, and I appreciate that so much. It's been pretty interesting. And what they had shared with me was the inverse relationship on the NQ and the ES to the DX, and of course the euro will have an inverse relationship as well. But I'm just going to go over the ES and the NQ, and it's helpful in timing your trade. Like for example, if the DX is coming down to support and won't be able to go lower, and let's say that you were looking to take a long on the ES or the NQ, because of the inverse relationship, if the DX can't go lower, then you're not likely going to be moving higher on the ES or the NQ. So the example that I've got showing here is taking a short, and this was around lunchtime on Friday, and I wasn't trading Friday, but I'm just using this for the purpose of demonstration. And that's of course, if you're trading during lunch, but this was a good example, so that's why I'm using it. So you can see here we have a short setting up here on the NQ using our Keltner channel setup. Right here we get closed outside the channel, our indicator is above 20 and rising, and we look to take it. It's actually this bar here where I have the arrow, and you can see here where I've got the arrow on the DX, it's bouncing off of support. So you're going to expect that the DX is going to be able to move higher, so that would also give you the indication that the NQ will be able to move lower. On the ES, we did not have a setup until actually a little bit later. Let's see, it's probably about 1, 2, 3, 4. It's like 4 minutes later you'd be getting in here because the indicator was not in line on the ES until a few minutes later. And so with that said, you still are okay expecting that it would be able to drop, because at that point you've got your DX right here. It broke resistance. This area of reference is the low from the previous day, and now it's got room to move higher. So this is likely going to move up to the next area of resistance, so you do have room for the ES to move lower and room for the NQ to move lower. So you might find that helpful. On the DX, I'm using all the floor trader pivots with midpoints, previous day's high, low, and close, and 50% fib retracement. So I hope that you find that helpful, and if you have any questions you can always shoot me an email. And once again, if you want more information on the setups or on the webinar, just go to www.easyemintrade.com.